Hi there, Serial Trader here. I got a request to look at XLE, but I'm also going to look at crude oil since I think they can inform one another, being that they're highly correlated. And okay, so starting off with crude oil, this is the monthly chart, and I'm showing these average true range channels. I think I may have discussed them at least briefly at some point in previous videos. But why I'm looking at these average true range channels on this monthly chart. So I'm going back to where we made this peak in 2008, July of 2008 on crude oil. And you can see you basically only at one point here kind of poked above this +3 ATR channel on the monthly chart. And then that led to a enormous reversal. And oil went from $147 down to $33 here. Okay, and that was during that 2009 decline. What I'm trying to get at is just how unusual and rare getting above the +3 monthly ATR is, and how every time it's done that, you've had quite a correction at least, if not a crash, after doing that. So what did we just do here recently when we spiked up to $130 a barrel? Well, we briefly poked above this +3 monthly ATR, and now we've swiftly reversed back down. So I think, you got the case for a significant blow off top here in crude oil. And even on the weekly chart, again, got above that +3 weekly ATR. Now we reversed down swiftly. On the daily chart, above the +3 daily ATR, we've reversed down swiftly. So basically, it's just a condition of extreme, a terminally overbought condition here is when you get above this +3 ATR, and the larger the time frame, the more significant. In this case, multiple time frames, including the monthly that we did this. And now I think we're in the midst of a fairly substantial pullback or correction in crude oil. And if I just get rid of the true range channels here, average true range channels, and let's get back to that monthly chart. So off our March 2020 low. Now here's the thing. I think that we completed a major, well, let's see here, from 2008 to 2022. So like a generational crude oil bear market. I think we completed that on April 2020, and we've done potentially the initial impulse wave off that bottom, which I think you can make a strong case that we've completed that now. Now on this chart we went as low as negative $40, which did technically happen on that one unusual day. It's kind of an anomaly, but even if you go to Thinkorswim, where they don't include that month's contract, they use the next month contract at the time, I think you still went as low as let's see here, you still went as low as $6.50 per barrel. So either way, it was a very significant low. And either way, it looks the same. You appear to have a mature-looking five-way move off that low, and now we're, I think, in the early stages of correcting that. But yeah, so back to trading view here. So just to put a labeling scheme on this, I think you just got a pretty standard 1, 2. Now, I would probably label it like this: 3, and then we had an A, B, C running flat wave 4, and then a blow off top in wave 5, and maybe for 5 intermediate waves up. And now we're starting maybe something like this on crude oil, starting a corrective move in proportion to the impulse that we just did. So basically, longer term, you can still have a kind of a bullish overall stance on crude, but I think for multiple weeks or even months here, we're going to be under some pressure, and it won't be just one-sided. So if I let's go to a daily chart here on crude. So we're probably nearing the completion of the initial A wave down. Okay, so we could have a pretty substantial bounce up. We could bounce well up into the 100s again, even do a deeper tracement depending on what kind of corrective pattern we do. But then that should give way to another leg down for a simple zigzag correction, if that's the type of correction that we're going to do. It's too early to know what kind of corrective move we're in. For now, I think we just have this initial impulse wave down in progress and probably getting closer to completion. But aside from what kind of pattern it's going to develop as, there's a guideline, in the wave principle for the depth of corrective wave. So after you've completed an impulse wave, the depth of the next corrective wave is somewhere into the span of travel of the prior fourth wave and often ending near its termination point. So what's the span of travel of this prior fourth wave? If I have it labeled here as like a running flat, well, the top of the range of that fourth wave in that interpretation would be 85 and change, and the low end would be 61 and change. So let's just call it from around 60 to 85. So I think this corrective move could see those prices anywhere from 60 to 85, and obviously we'll have to get more precise about it once we have more price action to deal with. But yeah, I don't think oil is going to go back above 130, let's say, before it goes down to at least 85 and possibly as low as 60. And of course, we'll have to update our view of it as more price action develops. But if I just go on like a 4-hour chart here, what do you have off the top here from 130? I think you have the initial impulse wave in development, so like a 1, 2. You can make the case that we already have the 3, this is the 4, and we're in the 5. Or you could even make the case that no, this is all of 3. We're going to have a fourth wave bounce up here, and then another move down in 5. But it just looks like it's an incomplete sequence to the downside, even for this initial A wave, okay? Barring any shorter term bounces aside, and we can certainly have bounces during this decline, but I think that's all they'll be. I don't think we're going to see 130 or above for quite some time is my overall message here. So unless you want to try, shorting crude or doing bearish trades, I would just wait. I would wait till we have a more proportional, mature-looking correction to match up with this 5-wave move we appear to have done off those April 2020 lows. I would wait for that before entering like a major long position on crude oil itself. Now that I've given my opinion on crude, let's go to XLE. And XLE isn't identical, but I would say it's similar. And it looks like XLE completed some sort of 5-wave sequence as well. Now you could argue whether it's of the same degree as crude oil or not. But I would say, the place I would maybe start at least getting interested in XLE is again the span of travel of the prior fourth wave, which the equivalent levels on XLE would be let's see, this top was 59.41, let's call that 60, and this low end of this range was let's call it 45 or so. So basically from 45 to 60 would be an area where I would at least start looking at building like a longer term position in XLE. But where we are currently, around 70, it's not really interesting to me. I'd want to see more pattern development here. Like XLE also doesn't have as clear of a development, but it looks like we've started some sort of decline here. So yeah, similar to crude, I would just wait for more of a corrective decline, and not just in price, but I'd wait for more of a time correction as well. This could take, again, multiple weeks or months. But as far as just levels go, yeah, 45 to 60 area on XLE is where I would, start paying attention. And then again on crude, I think what I mentioned was, let's call it from, around 60 to 85 area is again where I would start paying attention. But more importantly, I just want to see, a mature looking pattern, a corrective pattern, before I'd start thinking about any kind of actual positions to put on. But that's my take on crude oil and XLE. It was certainly a good move off the, we'll call it the pandemic lows, if you will. But, another thing to mention, okay, so in commodities, it's often the fifth wave in particular kind of goes parabolic and then has that sharp reversal. And obviously crude oil is a commodity. So we actually even saw something similar here, hang on there, in gold recently. And gold almost got up to its prior high and didn't quite make it. I see that horizontal yellow line is where the prior high was. And now gold looks to be in a pretty substantial reversal back down. Now, I'm not that confident as to where we're at here in gold. I don't think we're done going down, is my overall opinion. But how it all works into this larger wave count, I don't know. I mean, typically you would expect to make at least a marginal new high after doing such a long corrective period in gold, if we did do a triangle here. But we didn't quite get there, so that's interesting. But again, I'm not trying to do an update on gold in this video, but just an example of this average true range channel technique. You see, we like on this weekly chart, for instance, we just barely poked above the +3 average true range channel in gold and had a swift rejection, similar, but obviously still different to the crude oil chart. Just thought I'd point that out. Anyway, yeah, that's my take on XLE and crude. All right, serial trader signing off.